Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London sugar markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ice raw sugar in New York. The main pattern here had been the large, old and big, bright red November 23 / September 24 bearish shift pitchfork. The market has been wrapped around mainly above, though still close to, what I consider as still breached, though with today's action, it may soon be broken, bright red upper time, currently at 1450. The reason this bright red upper time may now be broken is that all three main moving averages, the green short medium moving average, currently at 1442, the mauve medium moving average, currently 1451, and the gold long moving average, currently 1457, have all become squeezed into an area of about a third of a cent, and have propped up prices, especially last week. In addition to this, 4 weeks ago I highlighted a new pattern possibly building up, a possible bright green late March to date descending triangle pattern, utilizing the lows of April and June as the base with a bright green lower trend line, currently at 1328, and a late March to date bright green upper downtrend, currently at 1419. Now, I embraced this pattern enough that I laid out two possible descending triangle patterns 4 weeks ago from this, and laid out the patterns and targets for both. Thus, we have a smaller mid-April to end of June action, utilizing the same base for both descending triangle patterns, as the April 26 lower action, and a second pattern being the longer-term end of March, end of June action. The first pattern has a primary target X in the 16 even area, with a secondary harder to reach target X1 up in the 1682 area. Meanwhile, the second pattern has a primary target X2 up in the 1610 area, with a secondary harder to reach target X3 up in the 1703 area. Even a cursory glance can show that whilst the primary targets still are doable, the secondary targets look out of reach, and with time, and the market not exactly enthused to try higher, I considered retiring all topside targets for now, but I didn't. You see, this is where a new potential pattern came in, one I discussed 4 weeks ago. It was to regard the whole late May to-date action as a possible quite large double bottom pattern that is still in construction. If, and this is a big if prices manage to reach up to the primary targets X and X2 and have consistent and consecutive closes over them, then we would have a double bottom pattern and quite a large one, with all the bullish implications that may have. However, as I said 4 weeks ago, and I quote, first we have to get to the 1600 to 1610 area, and that is what we need to look for right now, end of quote. To be honest, for all of July, it didn't look like it would be happening. But during July, a new pattern emerged, as well as the possible vindication of another older pattern. To start with the old pattern, this was a mid-April to late June dark blue bullish Andrews pitchfork, and I drew it in an effort to see some direction in this market. I have to say the dark blue middle tie above, currently at 1612, managed to act pretty well as a dynamic resistance over the turn of June into July. However, since then, prices have been edging lower, towards the dark blue lower time, currently at 1432, until today when, as I previously said, other factors caused the market to shoot upwards. Question now is, will this rise be maintained? And the signs look hopeful right now, because we have another new smaller pattern, a July-based small descending triangle, so far unhighlighted, currently 1436 to 1459. And it is a pattern we have broken out on the top side late yesterday and especially today. We've already reached the primary target on the upside for this pattern, and the question now is whether prices can overcome the July high as well as the ones in May, all around that 1539 to 1549 area. Watch this space. Ice Europe white sugar in London. The main immediate pattern driver here remains the dark blue mid-April to late May bullish shift pitchfork. The market bouncing up today away from the dark blue lower tine below, currently at 456.20, and up towards, though not yet reaching, the dark blue middle tine above, currently at 478 even. However, this pattern has sat for a long period of time within a far larger pattern, a bright pink September 24 to March 25 bearish shift pitchfork, which had been the showrunner for this market for coming up to 2 years, but which saw the upper pink tine, currently at 462.5, repeatedly breached from late June to date, including today, such that I may soon have to retire it completely. There are also other more interesting patterns here, oddly related to the dark blue bullish shift pitchfork, and that is a bright green February to date uptrend, currently 456.60, sharing the move with the dark blue lower tine of what was originally a sideways triangle and then more recently becoming part of a mid-April to late June and then mid-April to late July ascending triangles, with the top being highlighted also in bright green, a bright green shallow downtrend, approximate to the February 2020 high at 456.70. Thus, for the sideways triangle, we have a primary target at 473.70, target already reached, and a secondary hard to reach target X up in the 495.60 area, a target still open. Whilst for the ascending triangle, we have a primary target X1 up in the 493.30 area, still open, and a secondary harder to reach target X2 up in the 508 area. We have during the start of July come close to the primary targets but then backed off, only to see prices try again higher today. So what do we have in the way topside that could affect the market's rise? Well, we have the April 2017 high at 489.10, which capped prices in early July. And beyond this, the purple extension to the old April to June 2021 head and shoulders neckline, currently 503.90. But as beyond the dark blue upper tine right now. However, I would look to the congestion from early 2017 around the October 22 low at 514.5 to look to as a potentially significant, and then, of course, the interesting bright red neckline extension to the end of May, end of August 2023 reverse head and shoulders continuation pattern. A rarer head and shoulders pattern, and that's currently at 523.40. Now, hopefully, maybe potentially impactful. One important difference to note here when compared to New York sugar, there is no possibility of a reinforcing double bottom pattern here, as seen in New York sugar, I'm afraid, something I have actually mentioned before. Sugar white premium spread. The key recent pattern here continues to be the dark blue February/March to date ascending expanding wedge pattern, currently 120 even to 163 3/4. The market did try pushing up and out of this pattern a few weeks ago, but failed to close over the congestion at 162 3/4 and the 21 high at 164 3/4, despite piercing it. Meanwhile, below we still have the pair of 50% Fibonacci lines from the July 19 to September 22 move and the August 21 to September 22 move at 128 3/4 and 131 3/4 respectively, as well as the June 2020 high at 134 1/4. Despite all three being recently pierced, we still have no closes below them. Meanwhile, topside, we have once again the 2013 high at 152 3/4, and other things such as the significant high seen September 2025 at 144 1/4 and July 25 at 151 1/4. So looking at it, the bullishness seen earlier in 2026 has been tempered, though we do have some significant supports below the market as well. Now there is one other big pattern, and it's a major pattern that could be in development, and one I pointed out 4 weeks ago. It's for a really big start of Q2 2024 to date, really big double bottom, one that could be seen as the rarer W pattern. This pattern will depend for its construction on prices reaching and stabilizing over that important 180 even level. So it's far from complete as yet, and indeed has some considerable way still to go to be built, but it is something to bear in mind for the future just in case. One final thing, and we now know the answer to this after I posed the question 2 weeks ago. And that is prices did not make a monthly key reversal up here for July, instead opting for the lesser outside month pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.